Wait a minute, you're telling me that I should buy right now and it's actually cheaper even though prices are higher, interest rates are higher, and insurance costs are higher? The answer to that question is yes. That's what I'm telling you. My name is Todd Baker, DFW Mortgage Master and Certified Mortgage Planner. And I get this question every single day from my clients, and it's a legitimate question. What I want to share with you right now is a way to buy and show you how it's actually cheaper and creates more net worth, short-term and long-term, if you buy now using this strategy. And here's the deal. The market is sort of soft right now. Our inventory has risen 40%. And what that's created is a situation that sellers are having to compete. Year over year, prices are up about 5%, but the list to sales price is being dropped over 50% of the time, and it's going higher. What that means is both builders and sellers of existing home are willing to offer you concessions in order to buy right now. Those are the people that have to sell. There's a reason they have to, or the need they need is so high they're willing to sell. They're on the market and they're willing to give concessions. We can take those concessions and we can subsidize a payment for you up to a few years, refinance you later, and that's going to be cheaper than if you buy and wait to buy later. I'm going to show you that right now. So we're going to assume that we can get a seller concession for 3%. And then what we're going to do is we're going to assume a $600,000 purchase. We're going to assume a 5% down payment. And right now, average interest rates are 6.9, but you can get like around 6.5 or so. So we're going to start with a 6.5% interest rate just for the sake of this demonstration. And we're going to show you how we can give you a 1-year payment subsidy. So a 1-year payment subsidy of 5.5%. Your payment would be $4,500. You're out of pocket $57.88. So now we're going to go look at a 3-year payment subsidy. 3-year payment subsidy, we can take that same 3% from the seller and we could use it to subsidize your mortgage payment for 3 years, effectively dropping the first year rate to $3,500 and the first year payment of $37.44 with about the same cash to close. It's a huge saving per month. So those are the two things we can do, the concession that would have the most impact on payment. Now, what's going to happen is rates are expected to drop going into 2025, and the target's probably going to be upper 4s where they're going to end up at. So we're going to do a 4.875 assumption, and check this out. So let's say rates drop to 4.875. You're going to be able to refinance this house with our rate protection program and put a permanent payment of $4,200. So now, let's say you decide to wait to buy. You wait to buy, and when rates drop, let me tell you what's going to happen. A mad rush by everybody to buy homes, and we have only a 90-day supply of homes. There's not enough homes on the market to satisfy demand. And when that 85% of the buyers come out of the woodwork, prices will be pushed up by 10% immediately. I know I work with several builders. They've all told me as soon as demand's higher, all of our prices are going up and all the concessions are going away. And sellers will do the same thing with existing homes. They're not going to have to give you concessions if there's 10 people. And you know what will happen? We just saw it during COVID. What happened? Overbid. That's what's going to come. It's going to put prices up. So yes, you can get that. You can wait and get that better rate, but you're going to pay more, have a higher base loan amount, and have a higher payment, and even have a higher out of pocket. And when we look, the savings over 24 months, huge savings by buying now and refinancing later. And look at your net worth. The net worth is basically the same. This one has a higher purchase price, but this is the same net worth. So it's good. You're going to end up much better off buying now and refinancing later. Give me a call if you'd like to build a plan. The key to this is doing a couple things. Number one, doing an assessment of where you're at, and then building a plan that results in a sustainable housing payment that integrates into your personal goals and your needs and what's most important to you. That's not what most lenders do. What most lenders do is just max qualify you, hand you an approval letter with a big giant piece of paper with a bunch of fees on there that'll scare you, and you'll have no really plan, and you'll sit on the sideline and end up losing money and paying more because you decided to wait. So give me a call. I will build you a great plan, and I hope you have a great day.